Verisk's Emerging Issues, your source for vital market intelligence on the evolving risks and opportunities facing insurers and risk managers that can help inform product development and strategic planning. Verisk's Emerging Issues.
Hello, and welcome to Verisk's Emerging Issues. I'm your host, Kevin Sullivan from the EI team. Today, we're continuing our audio series on how states are addressing a variety of emerging risks. Joining us here today is Jerry Workman, Verisk's Regional Director for Government Relations. Jerry, thanks for joining us.
Hi, Kevin. Thank you for having me today. Mitigation is an important topic and being discussed around the country. One such approach the states are taking is support for wind, wildfire, earthquake, flood mitigation, and related grant programs. Increasingly, states are embracing mitigation as one tool to control or reduce risk. Kentucky and Oklahoma, for example, recently joined other states by adopting a program based on IBHS fortified roof. Texas, Arkansas, and New York are just a few of the states currently considering similar legislation. The National Council of Insurance Legislators is also supporting mitigation as it recently adopted the Strengthened Homes Model Act based on Kentucky's IBHS fortified roof legislation. The proposal is designed to encourage consumers to strengthen their homes by fortifying roofs and making other improvements to increase resilience to catastrophic windstorm events. The model provides for a premium discount or rate reduction on the coverage if the discount or reduction is actuarially justified and there is sufficient and credible evidence of cost savings. Further, the National Association of Insurance Commissioners is also playing a role through their Center for Insurance Policy and Research, which is helping states to develop a mitigation program and an actuarially justified mitigation discount. The NAIC also created the National Climate Resilience Strategy for Insurance with the underlying objective to support activity to close the insurance gap. The strategy will include a national catastrophe dashboard, which will display risk indicators. The dashboard will initially be for regulator use only, with some limited public access. The strategy includes supporting states' efforts to promote mitigation. During a recent Western Governors Association meeting, frustration was expressed for what is perceived as a lack of effort to reduce premium or provide pricing and risk assessment transparency. The governors feel companies need to do more to bring down costs and make coverage available in risky areas. Suggestions were floated, including a complete overhaul of the system and mandating more pricing transparency. While a consensus was not reached, there was agreement something needs to be done. The benefits of home mitigation programs addressing wildfire, wind, and hail was acknowledged by the governors, along with an insistence that state investment in mitigation needs to lead to rate reduction. In the governor's view, rather than benefiting from rate relief, homeowners are continuing to experience premium increases and losses of coverage in risky areas. There's a strong desire by the governors to make reforms. The exact path is not clear, but it may lead to additional regulatory activity or legislation. And not to be left out, the National Governors Association previously issued a statement urging Congress to pass a comprehensive disaster relief package and funding of critical federal programs needed for recovery efforts. For example, the states requested Congress fully fund the following programs: the Disaster Relief Fund, Community Development Block Grant Disaster and Mitigation Programs, USDA Disaster Assistance, Federal Highway Emergency Relief, and request passage of the Disaster Management Cost Modernization Act. Back at the state level, in addition, Florida's Division of Emergency Management is developing the Elevate Florida program, consisting of grants and low-interest loans to elevate homes above flood level. Pennsylvania recently completed a flood study on exposure, and the District of Columbia is considering new flood legislation based on a recent study as well. California has long supported earthquake mitigation through its Bolt and Brace retrofit program. Each of these mitigation programs intend to reduce risk, thereby reducing claims costs, which will help moderate pressure on premiums and improve affordability and availability. We expect to see a lot of mitigation efforts across the country this year.
Very interesting. And what else is your team presently focused on, Jerry?
Wildfire, definitely wildfire. This was already an issue in high wildfire-prone states, and then the devastating fires in Southern California hit. Verisk's Extreme Event Solutions estimates losses from the Pacific Palisades and Altadena fires to be in the range of $28 to $35 billion. The National Interagency Fire Center records show that the extent of area burned by wildfires each year appears to have increased since the 1980s. And according to their data, of the 10 years with the largest acreage burned, all have occurred since 2024, including the recent peak years of 2015, 2020, and now in 2025. And as an aside, wildfires aren't just isolated to the west. You may be aware that North Carolina, South Carolina, and Alabama are also experiencing their own set of wildfires. According to the U.S. Forest Service study, as of 2020, 9.4% of the land area in the contiguous United States is in the wildland-urban interface, known as WUI, which this is the area where human development and undeveloped wildland meet, and where the risk of wildfires is the highest. More than 44 million homes are in the WUI. Between 1990 and 2020, there was a 47% increase in the number of homes in the WUI and a 31% growth in acreage in the WUI area. Unsurprisingly, with the growth of homes in the WUI, a University of Colorado study found a 246% increase in the number of homes and structures destroyed by fires in the western United States in the decades of 1999 to 2009 and the decade 2010 to 2020. To help reduce damage from wildfire, some states are beginning to mandate insurance mitigation discounts to incentivize homeowners to harden their property. These mitigation efforts include using fire-resistant materials, removing debris, reducing the number of trees on properties, and just overall minimizing the amount of potential fuel for fire near one's home. Here are a couple of examples. California was the first state in the nation to require insurance premium discounts for homes and businesses under their 2022 Safer from Wildfires framework. Oregon requires insurers to list wildfire risk mitigation actions the insured can undertake, if any, that would result in a discount, incentive, or other premium adjustment. Nevada developed a voluntary wildfire mitigation incentive program, which provides an expedited review process for insurers offering mitigation discount filings. Arizona established a Resiliency and Mitigation Council focusing on the homeowner's insurance availability and affordability in forested areas and in the WUI. States are also looking at how to respond to impact on insurance resulting from wildfires. For example, California prohibits non-renewals for a year following a catastrophe if the home is in the fire perimeter or in certain zip codes surrounding the perimeter. California, Colorado, and Oregon have enacted laws requiring insurers pay a certain percentage of insurance coverage for contents without requiring a detailed inventory form. California requires advance payments of additional living expense upon request, and New Mexico issued emergency orders responding to the Salt and South Fork fires, including mandatory advance ALE payments, that's additional living expense payments, waiver of deductible, postponement or of cancellation and non-renewals, and extended reporting periods for claim submissions. In response to underinsurance concerns that came out of the Marshall Fire, Colorado enacted legislation requiring that at the time of application and renewal of a replacement cost policy, insurers must provide an estimate of the costs necessary to reconstruct the covered structure based on certain prescribed factors. And several states have reformed or created FAIR plans. In the meantime, we expect legislative activity related to wildfire to remain high in 2025. So far, we've seen a number of bills introduced. For example, back to California again. California introduced a 10-bill package containing mitigation and recovery proposals, including mitigation grants, eliminating inventory lists, mitigation inspection programs, a public wildfire model, regular reassessment of mitigation discount regulations, and strengthening the FAIR plan. We've also seen wildfire-related legislation in Arizona, Colorado, Hawaii, Idaho, New Mexico, and Utah.
Really interesting background there, Jerry. And I guess now we could transition from the ground up to the sky. What can you tell us about convective storms?
Great topic, and thank you, Kevin. The team is also monitoring severe convective storms, more often known as severe thunderstorms, and they're generally local storms associated with thunder, lightning, heavy rain, hail, destructive straight-line winds, tornadoes, and temperature changes. These storms can cause a great deal of damage. In fact, according to the National Center for Environmental Information, there have been 27 confirmed weather disaster events with losses exceeding $1 billion each in the United States in 2024. 17 of those were severe storm events. So as you can see, even though hurricanes and wildfire tend to be the topic of news headlines, convective storms lead in frequency. Wildfire, flood, and hurricane, of course, will always lead in severity. To provide some hard numbers on the impact that this has had on the insurance market, wind and thunderstorm events accounted for 76% of annual reported catastrophic insured losses since 1998 and $57 billion in U.S. insured losses for 2023 alone. This is according to our very own Property Claims Services. Our Extreme Event Solutions 2024 Global Modeled Catastrophe Losses Report shows that average annual loss from global natural catastrophes has reached a new high of $151 billion. Additionally, the average exposure growth is expected to be 7.2%, including growth in property replacement values from new construction and inflation across modeled countries over the past 5 years. To provide some closure here, in order to reduce the impact storms have on communities, states have begun to adopt stricter building regulations and provide support for mitigation programs, including IBHS Fortified. Some states are providing grants to homeowners to help with the mitigation costs. It's important for mitigation to be holistic. Fortified roof, along with hurricane shutters, doors, and windows, makes for a strong sealed structure. Partially mitigating does not eliminate the risk. And finally, according to the IBHS, approximately 70,000 properties across 31 states have built or re-roofed to the fortified standard. And as mentioned earlier, Kentucky and Oklahoma most recently joined other states by adopting programs based on IBHS Fortified Roof.
Really insightful information and background. Jerry, thank you once again for joining us today.
Thank you, Kevin.
Verisk's Emerging Issues, your source for vital market intelligence on the evolving risks and opportunities facing insurers and risk managers that can help inform product development and strategic planning. Verisk's Emerging Issues.